The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 3. You get the Nasdaq up 17. S&Ps are up $1.50. Gold contract down $6.90, traded $1,146 an ounce. Silver down 27 cents, $15.04. You get copper flat at $2.52. Light sweet crude off 84 cents at $52.20 a barrel. Bonds, the 10-year up 2 ticks, down 2 ticks rather, 125.27. 30-year up 4 at 149.19. King dollar up 496 ticks at 97.28. You get the euro down 46 at 109, and the yen is up 55 at 123.95. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. If we go over to the SPY, we take a look at the SPY. What you had the last 5 days, folks, is higher price. And the contraction of volume inside this is really intriguing, folks, okay? Because what we've had here is that you get a huge counter-trend bounce. There's no two ways about that. And, you know, the bears would say a counter-trend bounce. The bulls would say we're going to new highs. Bottom line, when you take a look at this aspect of how we have done this, okay, if I pull this chart back a little, you'll see how this shakes out. So the highs that are, first off, in the SPY is 213.75. That high was established on the 21st of May, rather. So we come off the high of 213. You get down into 204, the low, which is on the 7th of July. 5 days in a row, we go higher. Now check this out, how it works out. First day, you get up there, you do 164 million shares. That's on the 8th. The 9th, we get 144 million. The 10th, we do 129. The 13th, we do 106. And yesterday, we do 81. Now, we haven't got to a higher high just yet. We're at 211.05 yesterday, and today we're at 210.99. Now, we'll see whether it gets to another high or not. This is the key. When you contract on volume this dramatically, and by the way, what you're going against, folks, is you're going against 202 million shares. That, bottom line, is distribution. There's no one in the store. They're buying the product. And yes, has it happened on the way up? Yes, it absolutely has. What we have here, however, is that you had such a severe downdraft. When you come up and it's so consistent. And in fact, if you are watching and looking at the chart right now, you can see the angle is really is pretty cool, actually. It's a 45-degree angle just on the way down. Bottom line, we'll see where this baby does shake out here today. But what I do expect you're going to see is that this is the end of the counter trend move. Now, if that's the case, this is what you're also going to have. What you're going to have there is that you're going to have 3 higher lows. No, 3 lower highs and 2 lower lows inside this marketplace. The Qs, we go to the NDX 100. Now, the NDX 100, no doubt, is the strongest one that's out there. That being said, what you also have inside the NDX 100 is the same correlation with the contraction. You have the contraction of volume. What you don't have is that you are at a higher price. It hasn't got over the highs yet, which would be the 111.03. We've made 110.77. So we'll see how this baby shakes out. Because when you do get this close, this is going to be just really wild, shaking it out. When you get this close, the bottom line is that the bulls should be able to bring it up and over. And yesterday was no doubt a day of rest because, you know, on a Monday, extraordinary day, wide price spread. You had the spread going with it, so I can see why yesterday no doubt was a sideways day. Bottom line, today, you make it or break it. Now, the IWM. We go to the IWM. What are we looking at with the IWM? Now, the IWM is the weakest indice. The IWM thus far has not made the high of the downdraft, which was established on the 29th. That high in the IWM is 127.07. Your volume was 49 million shares. We come into that yesterday with 21 million. So the IWM is basically screaming that it can't handle higher price. We'll see how that shakes out. Now, gold. Let's go to the gold market. We take a look at the gold market. Gold market out here is trading at 1146.50. Continued to push the gold market down. We're at 81,000 contracts. The low that was established out here on the 7th was 1146.80. We've hit 1144.70. The volume characteristic is 199,000 contracts. Now that low was testing the low that was established at 1143 on March 17th. You know, bottom line, we'll see whether it's going to make it or break it. You know, my take here is that it's going to save itself once again. So we'll see how that shakes out. There's no doubt that the first leg down out here today, we'll put this up on a 10-minute, and what you're going to see is this. Your first leg down, they got it into and down into that 1144.70 area. You had juice behind the move, 9,100. And then you came right back and tested that area with 6,000. So we went like this. We went 9,900 and then 6,000. That's the test. The test has already been done of the low. So now the bottom line is that, okay, are you going to get any juice going topside? In that correlation, let's go over to the GLD, because the GLD has been screaming that bottom line is that you can't knock it down. The GLD, we take a look at the GLD. We put this on a daily basis. And what you're going to see with the GLD is that we are trading out at 110.11. The 110.11, the low established in the GLD is 109.77. Now, what also happens in the GLD is this, is that you have an expense ratio, and this is important to really wrap your head around a bit. Okay, the expense ratio is 0.4%. So it's just like kind of like the SPY. You have to take consideration of that. So what really should have happened thus far inside the GLD, it should have already taken out its lows, because why? Because the expense ratio, the GLD always has to go down. It's never going to be at the price of gold. Specifically, the longer the GLD is in existence, the more that it's going to be basically out of sync with the actual price. You're supposed to trade at 10% of the price of gold. You can see gold's 1147. We're at 110. So that would be a correlation of 1,100 versus 1147. That $47 is the amount of money that's been taken out of the GLD since the beginning of the existence of it. Okay, so that being said, when you take a look at the GLD, what we have is that the GLD thus far is testing the low that was established just last week. That was 110.05. We did 9 million shares there. We did 1.6 right now. You know, so we'll see where that shakes out. The larger issue, of course, is that if you are a bull out here, you want to see the GLD close 4 pennies higher at 110.09. And what 110.09 is, folks, is this. It's not the low that was established on March 17th. It is the sign of strength that we came off that low, and then we went from 110.09 up to 112.87. So that's a big number. I suspect, you know, that you're going to have volatility out here, that we're going to get that action out here also. Dollar index. What do we have with the dollar index? Okay. Dollar is out here this morning, and the dollar is trying to test, pull this baby, DX. Gotta love this market, folks. This is a good market, good traders market. Okay, so dollar index. What do we have with the dollar index? The spike that we had on the 7th, that high out there is 97.45. It tried to make it yesterday and couldn't handle it. We're at 97.33 right now. I'm really hoping it does make it today. The reason I'm hoping it makes it is that what you had, until you really test that level, it's not really giving you enough information. Yesterday it got up to that level, close to that level, had lighter volume, couldn't handle it. I want to see how it tests that level. The reason being, it's not so much this swing point right here. That swing point, folks, was the failure of how we came down on June 2nd. That's the real bet. The real benchmark here is 98.00. When we did the counter trend bounce and came back up, it gave it up at 97.45. If it can't even get to the swing point that was established in May, that is an indication that you're going to come right back down the other side. Now, intraday, what you're going to see is this. I'll put the intraday chart up, and what you're going to see is that when we came down yesterday, intraday, okay, there was some action inside that dollar index. The first sell-off that was established at 0830 yesterday morning. Let me put this up. So 0830, I'll show you this. That 0830 yesterday morning, that's when we came down to 96.30. That is saying that dollar wants to go right back into that level. So I suspect what you're going to have out here today, we get a lot of earnings out here today. You get Yellen's already been talking out here. You're going to have more of that. Bonds, if we go over to the bond market and take a look at the bond market. The bond market is the ever-ready bond market in an extraordinary way. Bonds continue to basically reject lower price. They've been in a consolidation. If we take a look at the TLT first, what you're going to see is that you've been bouncing along this bottom of the TLT. What it's also shown, though, it's shown two separate signs of strength in the last 2 weeks. First sign of strength was established on the 29th of June. You go top side, we did 17 million shares in the TLT. July 2nd was the next one, and we did 16 million. So bottom line, what bonds are showing, we have more buyers than sellers. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's up 11, Nasdaq's up 16, S&Ps are up 2.5, gold's down 680, silver's up 26 cents. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And you know, if you're in the taxi cab business these days, folks, it's a tough business. In Manhattan, okay, which has the highest value of medallions still in the United States, they have got absolutely smoked. So listen to this, because you know this has actually gone down even in the last couple months. Because when we were up there at the Traders Expo a couple months ago, and they were pushing about 870. Right now they're 770. And cabbies aren't the only ones feeling the heat from Uber Technologies into New York City. Lenders are also. So check this out. Taxi companies typically borrow against the value of the medallion licenses to carry passengers, then finance loans. Of course, it's all about the signature. Citigroup is right now trying to foreclose on 89 medallions. The New York Community Bancroft put its taxi loan portfolio up for sale. Who wants to buy that? That's not even close. And credit unions with a combined $2.5 billion in medallion loans are suing the city for failing to stop Uber from stealing customers. Among the turmoil, the value of medallion has sunk from 770. Right now, the bid's 770 from 1.1 million in 2013. It's very hard to find new financing for medallions. Competition from New York's 26,000 Uber drivers has driven down the meter revenue for the city's 13,600 medallion holders and their 50,000 operators. The breakdown of the $15 billion New York City industry that began with Uber only 4 years ago. This is pretty intense. For many years, medallions were a better investment than gold. Between 1980 and 2013, the values soared more than 1,000%, while gold only gained 181%. The medallions' reliable cash flows meant that lenders could have access to the industry. And of course, that all changed when, in fact, Uber came into existence in New York City. New York Community Bancroft last year said it would try to sell its $200 million taxi medallion lending business. It has yet to find a buyer. You're going to see there's going to be huge problems everywhere here. Their claim in panic would be premature. You know, what's wild, folks, is this, is that the taxi business in itself is a great business because anyone can get in a cab or get in an Uber car right now, make money, period. There's no reason that people don't have a job. That in cities, that's for sure, okay? The reality for many drivers in New York City, I would say, is that they really don't understand the ramifications of it because they've made money for such long periods of time. And what has happened is that you have small business guys that have 3 or 4 medallions, done very well, worked their butts off, and moved all the way up. And they are not moving out of that medallion business, and they should be moving out ASAP. So just picture something. This is what is amazing about it. Just picture what you're talking about here. You're talking about buying something for $770 right now, $7,700, okay, for something that costs nothing. But why are you going to pay $770,000 when you can do it for nothing? It makes zero sense. Now, this is going to be an aspect that it's only going to continue to go down. Uber's not going away. There's no doubt about it. And particularly, it's not going away in New York City. You know, there's going to be suits out there and all that, but it's not going away. So it's like, so out of whack, it's unbelievable. And, of course, it's disruptive technology. New York is going to be the biggest hit, I suspect, though, flat out. There's no two ways about it. And when you're up there, what does happen is this, is that I used it a few times up there versus the taxi. What you still have is that the taxi, because there's so many of them, the taxi is still easier to get, even though the Uber is quick, okay? And they're much better cars by a huge amount, okay? But bottom line is that when you do the math on it, math makes no sense. It's zero sense. If you're a young kid out there, or you're just leasing the car, so check this out. Oh, then this is going to be a trip, because this makes a huge difference too. So check this out. There's two different ways that you drive a cab. You either own the cab or you lease the cab, right? When you lease the cab, most of the time it's a 12, 24-hour lease. You lease the cab, you go out and make the bread, you come back, all of the above. You're still an independent contractor, okay? The Uber situation, what Uber has done is this. They have established financing that if you want to go out and get the car, they finance the car, they put you in business, forget it. You know, bottom line, you got a medallion out there, sell it. You know, someone unfortunately will buy it, but that medallion business is going down. 877-927-6648. Dow Industrial's up 10 right now. Nasdaq's up 10. S&P's up 2.5. We're going to break back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, as you are over to TFNN, you're going to see right on the top of the carousel the TAS Profile Scanner Plus. This is a great program that our man, Mr. John Logan, has put together. Now, you can test drive this 14 days, absolutely free. That's a value of $70. Tonight, from 5:30 to 6:30, John and I are going to be doing a workshop walking you through this profile scanner. That's free. If you decide that you want to come to this workshop and or test the profile scanner, just come over to our website at TFNN. First name, last name, email, no credit card. You can test it 14 days. You can come to the workshop. And as an added feature, you're going to be able to test drive the Tiger's Den for 1 month absolutely free. That's an additional $39.95 value. So you're getting a value just between the profile and the Tiger's Den of over $110. Check it out right on the front page of TFNN. This is a great time to take a look at that scanner as all these markets move and move quite a bit. What you can expect out here today is that I expect as the day is going on, you're going to see the volatility get a little bit bigger out here. That's how this whole thing is shaken out. The oil numbers just come out, and basically oil's staying flat with these numbers coming out. The drawdown, let's go look at, so oil right now, we're at the, let's see, with CLQ5. So let's see. Print and paste. Sorry, but let me get this thing in front of me. So let's see. Well, oil fell prior to. Oil fell as the dollar strengthened on speculation the U.S. Federal Reserve will boost interest rates. The bottom line is rates. I suspect. You know, is she going to go up in September? We're in July right now. I'd say no. I just don't see it. The supplies, the crude supplies, basically was a drawdown. Bottom line is that the oil market itself right now, if we bring this baby up, let me bring the futures up. What I suspect we're going to see out here is that you're going to get a nice little dead cat bounce. What we did out here yesterday is that, and there's no doubt in the future we're going to have more oil. Iran's going to be out there pushing oil out. There's no two ways about that. Yesterday what we had is this. Yesterday we got down to a price point of 58.8. We did volume of 423,000 contracts. That was going into, though, 541,527. This morning, you're just going sideways. We haven't even got to the low of that 50.88. What that's telling me is that oil is building cause to basically get back up into the 55.34 area or the 50.68 area. But that area, the differential in that area, folks, is just where oil had gapped down, you know, from the July 2nd, July 4th time frame. That I suspect is going to be a nice shot up at that area, because on a a longer period of time, looks to me like oil wants to go lower, big time. There's no two ways about that. If we go over the NDX 100, we take a look at what's running the NDX 100 right now. You get the pharmaceutical, the biotechs. The biotechs have been taking care of the NASDAQ for quite a while, and they continue to. Celgene is up $11.99 at 134. Vertex Pharmaceutical is up 5 at 134. Amgen is up 236 at 161. And Biogen is up 542 at 405.62. Bringing the NASDAQ, the NDX 100 down, even though it's up, is that you have American Airlines is down 98 cents. Micron's off 43, Wynn Resorts is down 2, and Mattel is down 36. Inside the Dow Industrials, what do you have? The strength inside the Dow is Johnson & Johnson, that's up 97 cents. Apple's up $1 at 126. Disney is up 80 cents at 118.62, and Merck is up 33. Taken away from it on the way down, Walmart's down 45. You have Boeing down 56. Verizon is off 16, and Nike is off 21. If we take a look at the European markets for a second, European markets are basically flat out here. The FTSE is flat, straight out. The DAX is up 0.3%. Last night in China, guess what? Shanghai still couldn't handle it. In fact, I'll bring Shanghai up right now so you can kind of see how this is shaking out. Let me get this screen over here for a second. There she goes. So the Shanghai market, we're at 3,800, 3,805. It's off the highs of course, the 5,100. What's going to be intriguing here is watching how it attacks the lows that were established out here. It looks to me like, the first leg down, it kind of went almost right where it should have went. If you happen to be watching Tiger TV, you're going to see that 32.39 is where we had some decent volume on the way up. That brings you back to December of 2014. That level, we got close to it. What we have, however, though, is that you're going to have much higher volume. But right now we're still dealing with halfway through the month, 15th, and the volume expansion is going to be greater than it was. So that says, number one, you're going to be back to that 3,200, and we'll see whether it goes into this 2665. If we go over to the Hang Seng, we take a look at the Hong Kong, because what had happened is that when they shut down the trading, made it very hard to trade, that you couldn't sell so many stocks in China, the selling went right over to Hong Kong. Now, the way that Hong Kong is set up is really wild. Because Hong Kong's already back inside the lower range, meaning that 24,900. So what does that set up? That sets up, hey, we have game here that 22,000. Well, we have game to 22. We're at 25,000. Yeah, you have game to 22,000 once again. Yeah, and see the 22,000. This is intriguing. What saved the Hang Seng. And this is what's really cool about high volume, whether it's up or down. When the Hang Seng had come down in August of 2011, it came down with volume. The high of that level is 22,808. That's what saved the Hang Seng thus far. There's 56 billion shares there. So far, the Hang Seng has done 30 billion. So that's going to be a close call whether it will have enough volume to break that baby down. What it has done, however, is that it went where this stopped in its tracks was where it came down in January of 08. So we'll see how the rest of this does shake out. But to me, it's not over there, and it's not even close to being over there. Some of the high volume stocks in this low volume market, and today's going to be intriguing with low volume, because particularly the market has every right to get volume inside this market out here today. Bank of America's up 49 cents. They come out with their numbers. They make big money on the countrywide purchase is finally kicking in for Bank of America. It was all about mortgage income. Apple's up $1. You got Netflix down 77 cents. Oh, let's go to Netflix. That's going to, NFLX. Netflix is going to be some fun after the close. I think it's numbers today. But yeah, today, okay, 16:05. Netflix is going to be out with numbers today. And, of course, Netflix has been a rocket ship. We take a look at that on a monthly basis. So let's see. 500 million. Well, the way this is set up, this is going to be crazy watching this. Okay, so if this is ever an ABC up, let's see. You got $7. It's one way of looking at it. Yeah, $7 to 60, that'd be $65. Oh, that's interesting. It's right where it is. Okay, so let's do this. So, and this is, they already did the stock split out here, okay? So I think this went 10 for 1 today, okay? So, 770 is your A. Your B would be $70, so you get $63. That'd give you $163, $108. It looks to me like the ABC's already finished. See, what you've done, you're taking a B point out in April. So if that's all it is, that would be a disappointment. That would be saying that yeah, you can get the gap up to 106, but then that would be all she wrote, which would be really intriguing inside of Netflix because of the fact that Netflix normally moves dramatically. We'll have to get into that the Thinkorswim platform and take a look at the options to see what type of move they're looking for in Netflix. I'm sure that it's pretty dramatic and not a move like that. Let's go to Bank of America. We take a look at Bank of America. Bank of America is up 51 cents, going after its highs. Numbers-wise, this is what they said. Let's see. So BAC, the lender, killed in the housing market, and realistically because it was countrywide. Let's see. Okay, housing. Second quarter profit more than doubled as the mortgage business rebounded and expenses fell the lowest since 2008. It was a giant step forward. Bank of America cost shrank 25% to $13 billion. Of course, that's going to be because of the fact that the fine structure, they paid most of the fines off probably. Legal expenses plunged to $175 million from $4 billion. There you go, a year earlier. Excluding litigation costs, expenses fell 6%. Net income increased to $5.23 billion at 45 cents a share. Mortgage gains. The firm's mortgage operation outperformed its biggest rivals in the second quarter as revenue from the business almost doubled to $1 billion from a year earlier. Home loan revenue at Wells Fargo, the largest U.S. home lender, dropped 1% to $1.7 billion. San Francisco company reported it fell 21%. It's what you have happening, and this is really intriguing. We have the real estate fund, and we have quite a few properties, and watching the differentials of folks that have been in the market, are getting in the market, and what is happening even in St. Pete, Tampa area is getting really intriguing right now. And what it is this. So you can picture the acceleration in price is there in a big way. What is happening, however, in certain areas, particularly in St. Pete, because St. Pete's on fire, is that the structure of flippers buying houses, hoping that they can sell them very quickly to someone else, is getting to a point that the house itself does not sustain the rent structure. Now, when that happens, folks, okay, that is always troublesome in those markets. It doesn't mean the market stops, and what's really intriguing, for me individually and for the fund and for our investors is that you have, what I've seen is this, you have the structures that people really just don't understand the rent structure, that it should be able to sustain itself versus the flipping structure, and they're in the same city. You can still turn around and get a deal inside the city, and the rents absolutely sustain the structures plus a profit, and then you can go about 10 blocks away, and all of a sudden they think that's the part that you should be buying, and that part in particular, what's happening is that they're way overpaying. Just if I give you, let's say you're paying 180, 200 grand. Bottom line, you're still, you're only going to get $1,400 a month rent. That's insane. That's like, see you later. That means you have to sell it to someone else to make money. Versus you're paying, whether it's $150, $200, and you're getting $2,300, $2,500 to sustain that level. And what I've seen in the last 3 or 4 weeks, and this has really just come about in the last 8, 10, 12 weeks. And what has happened because of that is that the flipping industry is huge. There's flippers right now that are starting to get in trouble. And how they get in trouble goes like this. They're getting in trouble because they're going to hard money lenders. And what happens with a hard money lender is that, let's say you're going to buy a house at $100,000. Hard money lender will say, okay, you come up with 20 grand, whatever that is, 25 grand. Hard money lender will give the rest of it. Hard money lender is pushing out at 12, 14%. And bottom line, you better get that money back. You have to get that money back 6 to 8 months. There's no incentive in there. So it's going to get intriguing watching this whole structure, how it plays out. We're still in a sweet environment here compared to the rest of the country because of the foreclosure. They're still running about 600 foreclosures a month. What has happened, however, is that they're paying, there's individuals that are paying way too much money for them. The banks are buying quite a few of them back. The intriguing part, the banks are still so whacked out, is that they'll buy them back on the actual foreclosure site, and then the banks have another foreclosure site that we can buy them off, and then they just sell them for whatever they can get. They don't bid. There's a site that the banks have that they don't bid on, that they put all their properties on, and it's like, oh my God, someone's not thinking. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials up 23. NASDAQ up 15. S&Ps are up 3.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 28, Nasdaq's up 18, S&Ps are up 4.5. And when you talk the bond market, folks, okay, the bond market is a monster. I'm sure you've heard many times that there's liquidity problems inside the bond market. The Fed just came out, so check this out. The Federal Reserve doesn't see signs of liquidity problems in U.S. bond markets, despite warnings from investors to the contrary. This is the Fed's quote. While market commentary increasingly pointed to possible deterioration of liquidity in these markets, a variety of liquidity metrics, including bid-ask spreads, bid prices, have displayed no notable sign of liquidity pressures over the past half year. The Fed board said Wednesday in the U.S. Central Bank's semi-annual monetary policy report to Congress, which they're giving them right now. And you know what's amazing, folks? It's such... Okay. So the Treasury, and what they're specifically relating to, is on October 15th, okay? The bonds, they had a price spread that was wild, absolutely dramatic. So U.S. regulators said in a report that sharp swings in the Treasury market on October 15th were in part caused by an abrupt withdrawal of buy offers by banks and multiple orders from high-frequency traders that canceled each other out. Treasury yields plunged and then rose, covering 37 basis points during the 12-minute period. Okay, so check this out. If I've learned anything over the course of the last 20, 30 years, it's that when markets go down, it used to be the whole mantra that the specialists inside the New York Stock Exchange, they were so valuable because they always would have a bid. They don't have a bid. It's not even close, folks. When markets go down, bids get pulled. Always, always, always. That's an always, okay? So that's not going to change. And inside the Treasury market, the liquidity will be there. So what the Fed is saying, yes, the liquidity will be there. It will be there, but guess what? It'll be there at much lower prices when, in fact, you have fast markets. That's just how it goes. Now, that's Treasuries. The bond market is a lot more than Treasuries. The squeeze inside the bond market, and I started out in the bankrupt bond market, goes like this. When the bids get pulled, you can't sell any bonds. It doesn't matter. I had bonds that people wanted 50 cents on the dollar for. Guess what? I gave them 14 cents on the dollar for. There was bonds that they wanted 65 cents. Great, you get 18 cents. It was that cut and dried, okay? That's how the bond market reacts. The reason being is this. When cash stops, why buy anything? That's what it comes down to. So, my take on the policy of where rates are going, I still think rates are going to basically stay cheap. That being said, In between all of that, there'll be stops in the marketplace. And when you have fast moves in the marketplace, you'll be able to sell a treasury, you'll never be able to sell a bond. It's not even close. So if you're buying bonds, well, first off, if you're buying bonds, what you should be doing, just to get your principal back, is you should be laddering treasuries. You go to Treasury Direct and you can ladder treasuries. What you know there is that you get your principal back, you get your percentage, end of story. Do not go in a bond fund, because the fact of the matter is when rates do go up, at some point they're going to go up. There's no two ways about that. They have to go up, okay? Bottom line, the funds themselves will absolutely get smoked beyond belief. I mean, and the aspect, people that invest in bonds, they don't expect to lose any money. That's just how that bond market is generated. Don't forget, John Logan, myself, 5:30 tonight. Check it out on the front page of TFNN. You stay right there, man. Mr. Basil Chapman's going to come up and growl and prowl with you. Dow up at 28, NASDAQ up 18, S&P's up 4.5. Basil's coming right up, folks. Have a great one. Have a safe one. Look forward to speaking this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.